So you want to sell puts to replace your income, but you have zero clue which stock to use, when to get in, and which option to pick. I'm going to give you my cheat sheet to make this plug and play for you. So hopefully one day you can walk up to your boss and say, peace, I'm out of here. I'm going to Cabo because I'm replacing my income selling options. Let's get into it. My name is Matt with Market Moves. I collect thousands of dollars per week and I show it live on YouTube, just selling options. It's so damn easy. I wish everyone would just start doing this. This week alone, I'm looking to collect over $3,500 in 1 week. Bam, click a button, collect the money. That's literally how it goes. So inside this video, I'm going to tell you how to do it with puts using this income cheat sheet. And if you don't believe me, if this is possible for you in 2021 and 2023, hit six figures just selling options. I took a 40K account to 200K and I literally paid myself 100 grand. Not many people can show you a screenshot of this stuff and make it this transparent. So what I'm teaching you is what I've been doing since 2020 and 2021, almost 4 to 5 years of just strictly selling options to get the $1,000 to $2,000 a week. So here we are. We're going to go over the company size you need to look at, the trend, how to recognize the best trends to use, and then when it's not great to sell options, the discount area to enter the play, the expiration date, the chance of profit, and the percent return you're looking for, because that's going to dictate whether it's worth it or not, and if you should kind of change it up, look for a different stock. But that's going to lead you exactly to the right option. And at the end of this video, I'm going to tell you everything in terms of best practices in one slide so you could take a picture and do this on your own. But first, we're talking about the goal of a put. So you're selling a put, you're selling to own the stock, right? You're not selling puts to just make passive income. So only do this on stocks you want to own. If you're ever fearing the stock, owning it, don't sell the put. If you're premium chasing, only do that with a portion of your capital. If you want to do this successfully, you have to enjoy the process of owning the stock at a discount, because you make more money with covered calls, which we'll teach in other videos on the channel. And that's the real opportunity that you want to be subjected to. So just realize that selling a put is just the start of the journey. You want to understand how to own the stock and sell covered calls at the end of the journey. And so the biggest reason you're selling puts is because if you do have to own the stock, guess what? You're collecting passive income when it hits your strike price, when it goes under during expiration. You collect the premium and you own the stock cheaper. So it's a no-lose scenario. If you're doing it on stocks you don't mind owning, you get to own the premium and the stock at the same time at expiration. So for example, I saw Amazon this week. If you did an Amazon cash secured put with like 4 days to go, you can own Amazon for a 2% discount. So why would anybody own Amazon today at the current price it's trading at? Why would you just not sell a put to own Amazon? That type of stuff is next level when you understand it. And if you talk about decades in the market or years and years of doing this, if you're collecting an extra 2% or you're owning your stocks an extra 2% cheaper, that's going to add up greatly over time. So I'm going to take my ugly face down here and show you kind of the aspects of our cheat sheet. So I was trying to decide how to find one metric that decided if the company was safe or risky. And I was looking at PE ratios, profitability, but at the end of the day, the size of the company is probably the biggest gauge on if you sell a put on a riskier safe company. Because again, if you're selling to own the stock, like if you make 2% and you're selling puts on Beyond Meat, it's different than if you're selling puts on Coca-Cola. Coca-Cola's been in a 40-year bull market. Beyond Meat's been in an 80% downtrend. So if you're getting the same premium, you want to make sure you just do it on stocks that are larger, because they're going to be here higher chance for a longer period of time. They're probably going to not drop as much in a bear market, and they're going to sustain like some more sideways movement. So the larger the better. Once you get over $10 billion, that's considered like a mid cap, even smaller cap company. But what you want to do is just get away from the stocks under $5 billion. $5 billion is sketchy territory, and Beyond Meat's at 400 million for market cap, and then Coca-Cola is at 270 billion. 270 billion. That's a lot of money. And so that just tells us it's a more established company. And stocks that haven't really hit that market cap, we just understand that either like the market's not pricing in their opportunity in the future, or they're just not getting enough money, not getting enough revenue to sustain themselves or give themselves a chance. So here's the next thing we want to look at. Once you find a stock that's relatively large, you want to make sure you're finding the right trend. So what you're going to do is go to the weekly chart and pull up the Ripster cloud. And the Ripster cloud should have 3 to 5 clouds, I believe. You're just looking at the first, second, and third cloud. And this is going to show you fast, medium, slow. And this is the one hack I've used in the last 5 years that's really helped me sell puts and have more success, is because if you're selling puts when you're in a bear market, you're always losing. If you think about it, you're trying to make 2% return. And so if you were to sell a put on ARK in the last drop, we had a red cloud, yellow cloud, pink cloud. These are all bear clouds. So from a technical perspective, we're in a bear trend, and this thing's only going to get cheaper. And when you see this happening, you might think there's an opportunity to buy the dip, but you're wrong, because you need some clouds to start flipping. When we go from red to green here, that's your first opportunity to start selling puts. But even if you just want to be safe long term, you need all clouds to be bullish. Because if you're fighting these clouds, you're just not going to enter like a bull market for a long time. And so every time you sell a put, you have the opportunity to just keep going into that bear trend and eating that loss away. Because with ARK, I was selling puts back in the day at $80. And this is a mistake even I made just a couple years ago. I was like, ARK is a good stock. Would love to own it. I think these companies are innovative and, new markets. And in 5 years, I'll be happy I owned it at 80. And, 4 years later, I'm down 50% on ARK. I sold puts to get into the play, but the premium I made selling the put was nothing compared to the loss I experienced. And yeah, you could sell covered calls once you own the stock, but every time you sell the covered call, you're limiting your upside. So if you own the stock at a discount, it can't drop too much, or else it's tough to sell the call. So it's only great if you got this stuff in bull markets. It gets really hard to manage when you're trying to sell puts in bear trends. And so you can see visually, like, this is a clean uptrend on Coca-Cola. Safe stock, great market cap size, and it has those long-term bull clouds. So what you want to look for is slow, medium, fast to be bullish. And once you see the slow and medium bearish, you want to stay away from puts. Don't sell puts on those stocks unless you're going to be in and out. And again, small portion of your portfolio. So next up, we're going to go over the discount entry. So if you want to sell a put, where do you do it? So we know the trend has to be intact, but when does it become a place for us to sell the put? Because if you just sell puts on Coca-Cola whenever the clouds are bullish, Coca-Cola dropped from 60 down to 50, like a 20% drop here. So you can't just sell a put whenever. You want to make sure you have it at a discount, like a further discount, because when you sell the put, you're buying the stock at a discount if it drops. And if you enter at my discount area I'm going to share, you're getting like a double discount. And so this limits the downside just a little bit more for you and offers that safety factor. And so this is what I look at typically, is the stock I want to see just be at a discount in general. Like if ARK is something you want to own long term and the clouds are bullish, wait for it to drop 20%. If it's a growth stock, it'll drop 20%. 10% if it's like a Apple stock or even Google, like those things may not drop as much, like Johnson & Johnson, but 20% is where the real discount is. So if you were like, no technicals, like I don't want that mumbo jumbo garbage, Matt, just freaking sell at a 20% dip. Your favorite stocks that meet our criteria for return, I'll show you in a second. So that's metric number one. If you just do that, You'll be better off just waiting for dips, selling the puts on the dips. The next thing is, if you want to use the Ripster Cloud, just look at that weekly chart. Always the weekly chart when you're using technicals on the high time frame. And then you want to look for it to sit on the medium and slow clouds. So all this is going to do is help you get it at support. Because if you sell a put, you don't want it dropping that much more, right? So the best, like, easy, quick fix, technical way for you to look at the market is throw up the Ripster clouds on the weekly. And when it hits the blue cloud or the turquoise cloud, just sell those puts. And so for ARK here, we hit 42, sell a put. We hit 40, sell a put. And that way you get that uptrend. So if you own the stock, you get that uptrend and you get to make a lot of money. But if you don't own the stock, you get to collect the premium. So it's offsets the risk, but also gives you the reward when the bull market comes into play. If you look at any time we've hit the turquoise cloud, the ARK has moved from 40 to 48, so 20% return, and then from 40 to 50, so 50% return, and then here's like 100. So if you can just wait till the turquoise cloud gets tapped and you trade sideways at least two candles sideways, that's your entry. You're going to be good to go. Now, how do you decide if it's worth it to even sell the put? This is a little math I use, a little cheat I use in terms of return, expiration, chance of profit. So first things first, I want to go 30 days out. If I'm going further than 30 days, just not worth it. I like to decay even like 20 to 15 days. I mean, I like to rinse and repeat. Sometimes I do the weeklies if it's perfect. Like I'm making 1% a week right now on Tesla. So 1% a week times 50 is 52. It's insane. 50% a year. So right now, if you do 30 days out on ARK, that would suffice. And then what we want to check next is your chance of profit, which I need this thing over 70, because if I sell puts 7 months out of the year, there's 7 out of 12, or it's 7 out of 12 should be me not owning the stock. And so there's only like a 4-month scenario or 3-month scenario where if I sell the put, I have to own the stock. And that's actually a good thing. Again, you want to own the stock and maximize that. If you just own the stock and you maximize the rally for 3 months out of the year, you can almost like double your yearly returns from put selling, because the stock appreciation, like I showed you from ARK, is like 20%, 20%, 50%. And so when you sell a put, you're making like 2 to 3%. But if you own the stock, you could be making 10 times that. Little hack there. And so lastly, we want to check the chance of, or the percent of profit. So we see here we're getting $80 credit. You want to just look at your max loss. It's not really a loss. Again, you would own the stock in this scenario. It's only a max loss if you're doing naked puts. So if you do the math, 1% off of 4,000, so 4,000 is the capital you need to allocate to this trade. 1% is $40. Like you put 40 grand on the line, or $4,000 on the line, you make 1%, that's $40. That's not going to get me to my goal at the end of the year. That's like 12% return. You know, we want to beat the index fund by at least like triple. So I want to look for anything that's like 3% or more, or 4%. So 2% is $80. That starts to get fun. But 5% really starts to get fun. That's $200. If you could put $4,000 into a put, 30 days, make $200, that could change a lot of people's lives. And if you start getting to the 10% range, which I know stocks that do this, I can show you scanners that find this, that's when you make $400 off of 4K. Most people will never trade successfully and make 10% return in a 30-day window consistently. So over time, if you just sell puts, you'll be way further ahead than day trading. So $400, that's going to be tougher to find. So lastly, I can give you this framework. If you have a bigger account, if you want to be a student, what we do with all of our students in the coaching program is we tell you the stocks to use to sell puts. We tell you the best entry, and we give you sneaky ways to increase your yield. This is something that is specific to me and specific to the system I've created. You can't really YouTube video this stuff, and I don't really post our coaching game plan perfectly on YouTube, so you won't be able to pick it up over time anyways. So if you do want that one-on-one aspect, if you do think that'll get you to the next level and you do have an account size that could justify 5-10% return replacing your income, then fill out an application. Let's chat. Would love to help you get to the next level. That's all I got. I'm going to release a video to the right of me of, again, selling options, unique ways to do it to help you, again, bring more passive income in, not be reliant on the 5-minute chart, day trading, emotional baggage, like having a good day, bad day, carrying that every day. Delete that. Let's just sell more options, make more passive income, and I'll share a video that's going to help you do that. Peace out, traders.